I'm Benoit, the founder and one of the portfolio managers here at Exponent, and you're watching the 2-minute market action for the third quarter of 2023. Investors were concerned about growth this quarter, and that explains the negative returns. The growth stems from higher interest rates and the impact of high interest rates on asset prices, commercial and residential asset prices, government deficits, consumer spending, which would impact growth, and inflation. Investors are worried about whether or not we're entering a new dawn of a new era in terms of interest rate cycles. You can see here since 1960, peaking in 1982, the 10-year government bond yields for Canada in blue and red for the US. You can see a peak here in 1982 and basically a downdraft all the way bottoming at the first quarter of 2020. This new rise in interest rates both is historic and dramatic, and investors are wondering whether or not this is the dawn of a new era. Investors care about interest rates and the rise of interest rates because of this formula. How do you value future cash flows in time? Here's an example. If we have $10 million coming over the next 10 years, if we're in a 2% interest rate environment, it's worth $8.9 million. But if we move to a 5% interest rate environment, that value falls to $7.7 million. This is why we always mention that bond prices, the chart on the left on the US 10-year bond prices, falls when interest rates rise. Here's another illustration. The 10-year Government of Canada bond rate rising this past quarter, moving from just under 3.3% to 4%, and seeing negative returns on the different markets in Canada and the US. Thank you for watching. Stay tuned for our next video, which covers market or stock market commentary, specifically around positions and interesting charts we've noticed over the past quarter.